Let's talk some coins. George Tsilis taking a look at Coinbase for us. Looks like a pretty solid beat for revenues, $2.27 billion. Street was looking for 1.9. Subscription and services revenue, $641 million versus $608 expected. But the outlook looks pretty good for that category as well. Next quarter getting up to $765 million possibly. Earnings almost double, I think, 27 times 2, double, 468 versus 227. George, not bad for Coinbase.
Yeah, not a bad report overall. I mean, all the internal metrics are improving with Coinbase or for Coinbase, and top line sales, if you look at that number, 2.27 billion versus 1.81 estimate, that's about 130%, if not more than that, year-over-year change compared to last year at 953 million. So obviously the company's been benefiting from the Bitcoin prices and all the altcoin transactions on their platform, particularly as the company's been growing its profit margins quite substantially compared to where they were just 5 years ago. I mean, the 31% net income margin, at least in the last 4 quarters, compared to basically flat to slightly higher single-digit net income margins going back over the last 5 years. So as the company's been generating more sales growth compared to, on a year-over-year basis, they're still trending lower, by the way. If you just annualize top-line sales last 4 quarters, excluding the one they just reported, 5 billion, is still lower than where they were in sales going back to 2021, but they're becoming more efficient as a business and seem to be achieving more scalable profits as a holistic business, and I think that's why the stock is higher over the last year.
All right. Yeah, the guidance seems pretty good, and the reaction seems pretty fair. We're 303 after a dip. Coinbase is usually pretty volatile on earnings, so I think that's just kind of name of the game to some extent. George, how much of the regulatory side do you think will move the needle on this stock? Like, how important is the call for this one? I feel like the call is going to be as important as the numbers. These are good numbers, but Brian Armstrong is going to be hyped about what this administration is doing for crypto. Yes.
I suggest you're onto something there, OJ. I think the call is going to be very poignant or very important because of what I see is, well, first off, to answer the question, I think the regulatory environment is certainly going to be more favorable for Coinbase in terms of transaction volume, in terms of subscription volume, reporting requirements, things like that will all be moving and benefit Coinbase and, of course, their customers. I think the call is going to be important too because one of the things I noticed is the full year estimates, which I haven't seen compiled just yet, but going into this report. Fiscal year 24 was $6.49, but I did notice for next year, fiscal year 2025, it's actually down about 12% to $5.29. I can't say exactly why. So my point being is that something may come about in the conference call to make those adjustments for fiscal year 2025, which, like I said, are expected to be down versus this year, 2024. While at the same time, sales estimates for next year are expected to be higher by 7.5%. So I think I haven't looked at exactly why the adjusted EPS came in quite a bit above estimates. It may be a one-time tax credit for just to give you an example. But I think next year's EPS guidance is going to be critical for potentially a continuation of price action going higher. And look, the stock is right around break even compared to the close, but this is the kind of company that can certainly move in either direction based on the conference call.
All right. Very well said. Thank you, George. Appreciate that. Good look at Coinbase. Okay. And I think a good explanation of this stock being up right now, but not much. So we'll see how that goes when we come back. Oh, we got DraftKings, by the way. DraftKings went up to $50, came back down to 48. They did get an EPS of 14 cents versus a 15-cent expected loss. Sales of 1.39 billion, a little bit shy of the 1 point that was expected. Looking at the outlook, which does seem like they raised it because that's the big one that Chad mentioned. 6.2 to 6.6 billion. They're saying now that 6.3 to 6.6. So just the tiniest little improvement to the revenue outlook for DraftKings. But Chad told us that they just needed to hold it and it would be nice if they were able to raise it. But I guess there were some doubts that maybe they could even hold it. So the revenue outlook coming in on the bottom end a tad from 6.2 to 6.3 billion. All right, guess it's enough for a little bit of a rally. DraftKings is up.